Okay, looks like we're ready to go here. So thank you everyone for joining us for our latest CreditorWatch webinar. Today we'll be looking at market insights from Q2 2017. So CreditorWatch puts together a quarterly report called the Small Business Risk Review. So we'll primarily be looking at some stats and some numbers from that. We also ran a survey recently to our extended database, not just customers. So we'll get some insights from that as well. So my name is Patrick Coughlin. I'm the Commercial Director. I think plenty of you have joined me before, so thank you for joining me again. If it's your first time, feel free to connect with me on LinkedIn. Before we get into it, just a few things. So within your GoToWebinar box that usually pops up there when you access a webinar, there should be a Q&A section or a question section, I believe it's called. So please feel free to ask questions along the way. We do have some staff standing by to answer them. If they're a little bit more technical or a little bit more, maybe require an email or a phone call, they'll probably just let you know that they'll leave that one for me, and I'll be in touch either to chat to you on the phone or via email as well. So please don't feel that we're not getting back to your questions. If you don't get a response at all, you will get a response in the next sort of 24 hours. I promise you that. Slides and webinar. So as always, we record this webinar and we'll provide the slides and a link to the recording probably by Monday. Friday, obviously, it's a busy day for us, closing the week out. So we'll get that to you at least by Monday, if not earlier. So looking at the agenda today, we'll talk really briefly about CreditorWatch. I think the majority of people who are signed in, you would know about CreditorWatch already. We'll get into exactly what the Small Business Risk Review is that we run on a quarterly basis, and then we can start looking at some of the results from that risk review and also some of the CreditorWatch survey results. I've got a couple of polls along the way as well, so I do appreciate your engagement there. So a little bit about CreditorWatch. We're Australia's leading commercial credit reporting bureau. We've got over 50,000 customers now, and that's really made up of people from small businesses or sole traders even, trading out of their home, through to ASX listed companies. So we really do gather data from the whole, I guess, corporate spectrum is the best way to put it. We've got information being lodged by, importantly, small businesses who are typically the first ones to feel or see or notice that a debtor is slowing their payment. Small businesses tend to get defaulted on before your larger corporates, enterprises, ASX listed entities. They typically are critical suppliers, though the data that they do lodge with us as well is equally important. They typically get paid up until the last minute. Being that critical supplier, they tend to be more important to the debtor, but also those credit managers out there will know you've got a dedicated credit management team, AR team, legal and debt collection resources at your disposal as well. Whereas we find most small businesses don't have that. It's usually a part-time accounts receivable person, or even when we're looking at micro businesses, it's the business owner or their partner doing the books on the weekend or on a monthly basis. A wide variety of products, as you should know by now, hopefully. We've got our core product, CreditorWatch, which provides credit reports, monitoring and alerts on your customers. So really important to not only do that upfront check, but obviously keep an eye on them on an ongoing basis. If something does change, we will send you an email alert if they go into administration or have a court judgment against them, stop paying their bills, that sort of thing. Apply Easy is our online credit application and decisioning solution. And again, that can be used by small, medium, large, giant businesses out there. It's really helpful to transition away from or be less reliant on paper-based application forms. It speeds up that sales process for you. We can automate the credit decision, the credit report, get that application approved a lot faster than the traditional paper-based method. And then we've got some sort of data washing and customer data updates, data fulfillment, that sort of thing. So if you've got, probably more so for the corporates out there, if you've got hundreds, thousands, or tens of thousands of customers, you want to update their details electronically, speak to us about that. We can get that done for you. We've got some really handy tools that go out to the customer, request that they update their information all online, and then we deliver it back to you in a nice CSV file so you can upload it back into your CRM or ERP system. So let's look at the small business risk review itself. We run this on a quarterly basis, and basically we're analysing or aggregating data from multiple sources within the credit bureau, as well as looking at court information, payment trends, that sort of thing. As it says here, it aims to provide a quick summary of key insights and trends that occur each quarter, and will assist you to better assess credit risk and be proactive in the face of increasing insolvencies, which is potentially not increasing insolvencies, but we're at a fairly high rate, similar to pre-GFC or even GFC levels. I think the ATO is obviously a lot more active at the moment in winding up companies that owe tax debt. They will be releasing that tax debt in the hopefully near future. So everyone needs to be quite aware of what is going on, not just with their own customers, but being able to understand what's happening in the general market itself. So we've got the various sources that we're collecting data from there for you to see, and obviously a link through to the risk review itself. So a nice infographic that we provide, PDF format, so you can download it, you can share it, etc. And we'll go through these results in a little bit more detail in just a sec. So I want to launch our first poll here and see what you guys have to say. So are you referring more debts to debt collectors, or are you taking more legal action at the moment than in the past? So have you seen an increase, in slow payers that you've had to refer onto your debt collection agency or take them to court, issue a statement of claim, try to get a court judgment, that sort of thing? If you're unsure or you're unaware or whatnot, that's fine. Just pop not sure there. Another couple of seconds. Okay. So what we're seeing here is no, 61%. Well, that's a good thing. That's definitely a good thing. 30% is still a decent chunk of people responding that they are referring more debts to debt collections or taking legal action, etc. It's always good to get a better understanding of the people that are listening into the webinars, and I can tailor my discussion a little bit more. I think it's also important to know what are other people doing out there. I think plenty of people at a corporate level, credit managers out there, are part of trade bureaus. Small businesses often go to associations or conferences, etc. And hopefully you're communicating there. And this is the sort of thing that can just assist you. You might have been referring more debts to debt collectors recently, and you're worried about it, and you see that there's a decent chunk of people out there also doing the same thing. So let's have a look at some of the data that we're seeing. Particularly, court action seems to be the most relevant or most striking thing that came out of our small business risk review this quarter. So in Victoria, we're seeing continued increases in both the number of court actions and the dollar amount of those court actions as well. So that Q2 has continued to rise after 2 successive rises the previous quarter. In Queensland, well, Queensland looked like it was doing quite well for a number of quarters there, for over a year really. But we've seen a significant jump in both, again, the number of court actions and the dollar amount. So it could be that there is a turn again with the mining boom up there, though we have seen plenty of big developers falling over. So it could be at a construction level as well. It would be interesting for those Queensland based businesses who are listening in. Feel free to rather than ask a question, put a note in there in that question box and just say if you are seeing anything specific in your industry and the industry you're a part of. And at the end there, I'll see if I can raise some questions around that as well. In New South Wales, a really big jump in the dollar amount, particularly of court actions that have taken place in Q2 2017 when we compare it to the previous year. It's funny, you see the previous year it was down significantly, so it really looks like almost a 24-month sort of turnaround. So it was obviously quite big in 2015 Q2 as well. New South Wales is definitely, I find, generally the leader when we see trade credit failure or trade credit slowing down their payment. New South Wales seems to be that sort of lead indicator that then gets followed by the rest of the country. So it will be interesting to see, if the court actions do continue to rise over the next 2 quarters. Middle of the year tends to be obviously a busy time of year. More business, I find, gets done in that middle 6 months, obviously, when we're away from all the public holidays and the school holidays, Christmas, New Year's Eve period. So I'll take us to another poll here as well. So what portion of your customer base is made up of unincorporated entities? So when I say unincorporated entities, I'm talking about sole traders, trusts, and partnerships. It's a part of the market that is often, I think, overlooked when businesses or business results, expectations, that sort of thing is being reported on. We find that, the majority of those things are purely looking just at proprietary limited companies, private companies, rather than, really getting into a big part of the market out there, which is represented by sole traders, trusts, and partnerships. Typically, they are much riskier entities to deal with for obvious reasons. There seems to be a rise in the number of trusts people are trying to apply, for credit under the trust rather than the trustee a lot more. And I think people, particularly suppliers and creditors, are becoming a lot more savvy, understanding that they need to be dealing with the trustee and identifying the directors behind that. Okay, let's have a look at these results. So 61% is probably less than 25% of your database is made up of unincorporated entities. And I think next time I might even break that down a bit further and do less than 10 and then 10 to 25, because we have seen that most people do shy away from them, but it looks like there's plenty there. 39%, almost 40% of you are dealing with unincorporated entities that make up more than 25% of your database, which I think is a significant amount. We know that unincorporated entities are quite difficult to report on, due to the fact that they don't have to lodge, their directors and shareholders and whatnot. There is less data out there. However, it doesn't mean that you can't access data. For instance, CreditorWatch obviously provides credit reports on all types of entities, including sole traders, trusts, and partnerships. You can still see court actions, payment defaults, mercantile inquiries. You can pull credit scores and payment predictors on them. So there's definitely plenty of information out there should you be dealing with these types of entities and you want a little bit more information. We can definitely assist you with that. So I guess that was a lead-in question or lead-in poll when we look at the next slide here. So it's not all bad news. Obviously, those previous 3 slides that we looked at, the court actions, we all saw rises in the 3 big states of Queensland, Victoria, and New South Wales. And I'm pretty sure that WA has also had a rise as well. But what we're seeing here is there's been actually a significant drop in the number of unincorporated entities that are failing. So they're still failing, obviously, and we still need to keep an eye on them. We don't want to, forget about them altogether. But there was, there was a significant increase that you can see there over the last sort of 5 quarters even, but particularly in Q1 2017 of unincorporated entities failing. And there's really no formal process for that to happen as well. Sometimes it could be a cleanup by the ATO or the Australian Business Register. However, it's definitely something that a lot of our customers themselves flagged with us last quarter, that there was there was a particular need to keep a closer eye on these types of entities. but it's nice to see that there has been a drop, and I think that's good for the market in general, because typically unincorporated entities are small businesses. They really do represent that small business market, and I think the majority of suppliers out there, a significant portion of their ledger will be made up of small businesses, not necessarily unincorporated entities, but small businesses in general. So we want them nice and healthy. They do represent 90+% of all trading entities out there at the moment. So looking at some numbers that I just pulled on payment defaults being registered. So what we're seeing is there has been a reduction in the volume of defaults, so 12.5%, but a 7% increase in the value of defaults. So this is when I compared the first half of last financial year to the second half of last financial year. So basically July to December 2016, we compare it to Jan to June 2017. Now, CreditorWatch had a significant significant growth in the number of customers altogether. So it is quite surprising to see the volume reduce. That's obviously on the back of hopefully people getting a little bit smarter around how they're operating with new entities, how they're monitoring their existing customers and whatnot. But that just gives you an idea of what we're seeing out there. In terms of coming back to that unincorporated entities, we ran a survey with CreditorWatch, I believe it was last month. We found that 86% of respondents felt more comfortable trading with a company from a risk perspective over a sole trader, trust, or partnership. And I think that's quite indicative when we looked at that other poll there that we ran just previously. So a few other insights that we got from the CreditorWatch survey that we ran recently. And again, that wasn't just CreditorWatch customers, it was across our database as well. And it's something that we're going to do on a fairly regular basis, maybe not quarterly like our small business risk review, but certainly on a twice a year basis. So nearly 1 in 2 Australian businesses are leaving themselves vulnerable to bad debt by not performing credit checks on their existing customers. So this is more so at a small and medium business level. There's plenty of businesses out there that just aren't aware of the fact that you can run credit checks. They're aware that their personal or consumer credit file will get checked when they go for a loan or a credit card or something like that. However, they're quite unaware of the fact that you can run credit checks on commercial entities, and it's something that CreditorWatch is working quite hard on from a PR and marketing point of view to educate, obviously non-CreditorWatch customers that is something that you can do. 72% of all respondents claimed that they always reviewed a new customer's repayment ability. Almost half said they reviewed the ongoing payment behavior for existing clientele. So that comes back to obviously monitoring your customers. So it's really important not just to do that upfront check, but how do you know they're not going to fall over tomorrow, the day after, or the day after you've run a credit check on them? You need to be able to respond to those alerts as they come through, be it a small payment default that gets registered, or an administrator being appointed, for instance. We also asked our survey respondents how they felt about chasing payment, and obviously these results that came through are probably not surprising. So the majority of sole trader and micro businesses responded that chasing payment is frustrating and uncomfortable. SMEs said it was mostly time consuming. And then unsurprisingly, as I said, when it looked at large corporates and enterprises, they said it was quite an easy practice. Now, most likely the reason for that is they've obviously got dedicated resources to do it, but also they tend to invest in software a lot more than small and micro businesses. In saying that, we do see now a lot of online accounting software like Xero and MYOB provide basic collection tools, something that CreditorWatch provides, but those companies are obviously providing some automated letters, templates, that sort of thing, There's a number of online businesses that have popped up around that accounting software or that accounting ecosystem that provide automated payment letters and invoices and statements, reminder letters, that sort of thing. So hopefully that we do see a drop, obviously, in the sort of frustration and uncomfortableness that these smaller businesses are finding, and also they start to save some time, obviously, at an SME level. Just some other things that I hadn't put on here, but things that we need to keep an eye on. If you are running credit reports, some fairly basic stats to go off. So a director with a previously failed company, so we call that an adverse cross directorship, has a 2.5 times more likely chance to fail again. So it's definitely important to have a look at those cross directorship adverse that you might see within our credit reports if you are using us. The other thing to consider is that an entity with a court action is 5 times more likely to have another one in the future. So that comes back to the fact that if you're running a credit report and they do have a court action, it's definitely something that you should be taking note of quite seriously. And similarly, if you're monitoring a particular entity that has a court action lodged against it, you really should be considering whether to close that, put them on COD, that sort of thing. At the very least, you should be getting in contact with that particular debtor to have a conversation about, what's their sort of state, what's their cash flow position, that sort of thing. Now, this isn't a poll that I'm running here. I'd really love some feedback from those people, from you guys who are listening in. What would you like to see reported on in the future? Be it from a survey point of view, information in our small business risk review, even just one-off surveys that we can include or write articles on. I'd really like to hear from you guys what you would like to see reported on. So please do use that questions box to ask some questions, or to at least contribute. And in the future, when we are putting together small business risk reviews, surveys, or we're writing articles, be it for our customers or our database, or even for PR related purposes, it's always really good to get the insight of the experts. You guys are at the coalface when it comes to credit, collections, debt, that sort of thing. So don't be shy. Feel free to contribute anything that you want to there. So that about wraps it up for today. If anyone does have any questions, feel free to write them in. I'll leave this open for another couple of minutes, and if I can respond to them, I will. If not, I'll get back to you. Also, you can always contact us direct, 0281882025, if you do have any questions that you want to contact us directly about. For those who aren't CreditorWatch members, or you'd like to set up a demonstration, for instance, please feel free to fill out this online form here, provide a little bit of information, and I will get someone to get in contact with you to set up a free trial for you or a demo. Keep an eye on the upcoming and previous webinars page. So if you click on there, we don't have any upcoming webinars at the moment that are locked in there, though we do have plenty planned. We usually do 1 to 2 a month. So we've got a few that we definitely will be putting up there very soon. I've just included an article or a link to our blog around the survey and the small business risk review results as well. We've got a couple of quotes in there from CreditorWatch MD and founder Colin Porter. So feel free to jump on there. Anyone who's obviously signed up to this webinar will get invites to future webinars and our monthly newsletter, which links to our blog. For those of you who potentially missed the start of it, I know that there was quite a number of people that joined us a little bit late. We have recorded this, and we will send out a recording and the slides themselves as well in the next couple of days, by Monday at the latest. So don't fret if you did miss out on the beginning. To be honest, it was more Patrick, myself talking about CreditorWatch and some, where we get our data and whatnot. So there wasn't too much that would have been missed there. I will sign off and let you be, get to lunch. Thank you again for joining us today. If you do have any questions, please get in contact, either direct on the website, calling us, or using the question box over there.